What is going on, everybody? It's Stas here. Welcome back to another video. So the stock market was crazy today, all over the place. It was a bit of an ugly day. We had the S&P down 1.2, the Dow went down 1.6%, the Nasdaq 100 down 0.4%, and we had the Russell down 1%. So today we're gonna break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, smash the like button if you guys find value. Take a sip of your coffee and check out my Patreon. It's linked down below. If you guys want my buys, sells, call outs, morning update videos, plus more, check it out on Patreon. And with that being said, let's get right into the video. So we talked about in my video earlier today that this head and shoulder on SPY on the 20-day 1-hour chart played out like clockwork. I mean, it was a textbook head and shoulder. The left shoulder's right here. We got the head right here. And today and yesterday and the day before, we were formulating, whatever you want to call it, the right shoulder, right? Especially now that we got rejected 2-3 times at 438 to 440. That pretty much cemented the head and shoulder, the right shoulder, and especially now that we dumped down, we saw a huge leg down today. That is the head and shoulder playing out. And you can see it clearly again on this 20-day 1-hour chart. And the fact that we got rejected by the moving averages and we're seeing a death cross here, that's not really helping the Bulls' case whatsoever. In fact, this market, the past couple of weeks, has clearly been dominated by the Bears. And this little mini rally we saw on the 20th, the 21st, 2nd, 3rd, pretty much all the way up until the 27th, that rally ended up being a bull trap, right? So at this point in time, we closed right around 428, 429, and we actually broke the low from last week, or about 10 days ago on the 20th of September. That low was at about 428.80 or something like that, and we got to 428.78, so we broke the low by a couple of cents, literally. So it's not too crazy, but if we start getting down 427, 426, which if I pop up the 4-hour chart like we talked about earlier, and we get under 428, especially, hence my alert right there, we're probably going to start going 422, and if we get under 422, 415, 417, we're going to see some sort of relief rally like we saw last week, and we'll see if that ends up being a bull trap as well, or if it's a real deal rally back to all-time highs. I mean, it's too early to tell, but for sure, in my opinion, if we get very oversold, another leg down, we're going to see a relief rally at some point, which could end up, making some opportunities out there, creating opportunities for some day trades, maybe some short swing trades, which make sure to subscribe to the channel because we talk about those plays literally every single day here on YouTube. So SPY's looking rocky. Let's see what it does at 428 tomorrow. QQQ. Let's pop that up. This one is more being, it's how can I say this? It's the Bears are dominating it more than what we're seeing with SPY, because at least SPY is holding on to that support from 10 days ago. QQQ's not. I mean, it took that support out from 10 days ago at 461. And from the support, it broke under the support from the middle of August. That was at about, did I say 461? I meant 361. And the support in the middle of August was 360. And now we're trading under that clearly. We're at 357.90. So at this point, I'm thinking QQQ could go lower, probably 350, 352. That was the low from the middle of July. And at that point, I truly believe, in my opinion, we're going to see some sort of relief rally. Maybe we even get a relief rally tomorrow. That's possible. Let's say we get a leg down in the morning, we get a bit oversold in the future session, then we get a nice bounce back. Hey, that is very possible at this point in time, and it's no question, it's no secret, the volatility is back. It's back. It's at a high point considering Well, it's not really at a high on this 4-hour chart, but we're near high points from the past couple of months. I mean, look here at the VIX. This is the volatility index, the fear index, whatever you want to call it. It goes up when there's volatility and fear, right? That's pretty much all you need to know. And look at where it is right now. It's at about 23.24. That is where we were back in August, back in July, back in May as well. And we were in the mid-high 20s in the middle of September. So if we start breaking up here on the VIX, 25, 30 plus even, that is going to be pretty rough for volatility. And it's going to create a lot of opportunities either for long-term investment entry points, day trading opportunities, maybe short-term swing opportunities. So we're going to watch and monitor the VIX, those key levels on QQQ and SPY. Let me know your thoughts down below in the comments. I'd love to know as always, and make sure to smash the like button if you guys are finding value in this video. It really helps me out in the YouTube algorithm, and I appreciate all of you, each and every one of you out there watching these videos. You guys mean a lot to me. So let's go over now some stocks that I'm looking at, some that did well today, some that sold off a bit, and some that are pretty neutral. So the first one here is CarMax, ticker symbol KMX. This one completely collapsed today. It went down 13%, about $18. It hit a high of 147.73. I think that was yesterday. And now we're trading at 128. So in one day alone, it got itself into correction territory. And if we're looking at these technicals and being honest with ourselves, the uptrend's still holding. This still looks pretty decent. I mean, if I draw this trend line, you guys can see 128 is a higher low compared to 123 where we were in the end of August, and it's a higher low compared to 114 where we were in the middle of June. So by the looks of it, even though we're under the moving averages on the 4-hour chart, based on this trend line, we're still holding the uptrend. And yes, we're still in a falling knife. This could go lower. I'm not going to jump in all in right now on this stock, but I'm going to give it some breathing room. I want to let the dust settle, and we're going to see what happens in the high 120s, low to mid 130s. Let's see if there's any consolidation and an opportunity there. But the reason why they're selling off is because they reported earnings today, and they missed EPS by a long shot. 172 EPS is what they reported. That was shy of the 189 estimate, so that's not good. And they beat sales, though. That's a good sign. $7.99 billion versus $6.85 billion estimated. So they crushed sales, missed EPS, and they bought back 1.8 million shares for $220 million. And I'm not exactly sure if this sell-off is warranted for the earnings report, if that makes any sense. I feel like this sell-off is a bit overblown. Sure, they missed EPS, but the fact that they're buying back shares, that's always a plus sign. I mean, we've talked about that many times on the channel. When a company buys back shares and you're an existing owner of the company, your piece of the pie becomes larger. You become a bigger shareholder, if you will, if they buy back their own shares. So that's a good sign. And they crushed sales, right? They destroyed the estimate. And on top of that, used car sales, the prices have been going up. I mean, we've seen the CPI numbers. We've seen the used cars and trucks category. That thing has been going up like crazy. Sure, not every month, but a lot of the months recently, we've seen a lot of inflation in used cars, and they sell used cars. So I think this could be a dip buy, honestly. And you must always do your own research, as always. But with the environment we're in right now, they could be doing well, a couple quarters from now. They can continue doing well with sales. Again, they crush sales. So keep your eyes out on KMX. And AMC is number 2 here. AMC did very well today, up 7%. And you guys can see it got super close to my $42 alert on the 4-hour chart. If I zoom in a bit on the 20-day, you guys can see that. We literally got to 41.80 earlier. We squeezed, wow, that's a heck of a squeeze there. From 34 all the way to 41.78. That was a move of about 20% intraday. Let me know in the comments if any of you all out there caught that. I didn't, but if you did, in, drop me a comment right now. And then we ended up selling off a bit from $41.78 to about $37, $38. That's where we closed. And by the looks of it, we're starting to get momentum back in AMC. Volume's kicking up. We're seeing a bit of a bullish divergence here as well with the RSI. I'm liking it. But there's a reason why I have my alert at 42. And there's a reason why we got rejected there, because that is right by the main moving averages on this 4-hour chart. If I zoom in a bit, you guys can see we hit the 180 SMA, got rejected, and we also closed under the 50 SMA here. So I want to see it break out of there. If it does, if it succeeds in doing so, this could end up seeing a breakout mid to high 40s yet again, and that is what I'm waiting for. So watch out for that. PAYX is another one that I'm looking at. This is Paychex Inc. They reported today the stock ended up crushing, and it went up 4%. It broke above both moving averages, and by the looks of this chart, the uptrend's continuing, and we're breaking back out after a good month and a half of selling from the middle of August up until now. So I believe that PAYX could make a move towards that high from the middle of August. On these earnings they just reported, they beat EPS 89 cents versus 80 cents, and they beat sales 1.08 bill versus 1.04 bill estimated, so that's pretty solid. And they see sales expected, their expected sales to grow 8%, I believe, for the next quarter, and EPS to grow 12 to 14%. Actually, no, that's for the full year 22. For full year 22, not too bad there. So keep your eyes on PAYX. It's moving nicely. Bulls are in control in this one. Volume's kicking up. Solid earnings report. This could have some legs on it. The run could have some legs for sure. CCL is another one that I'm looking at, which it doesn't take a rocket scientist to have predicted this one pulling back, because it got very overbought. It went from 23 to 27 pretty much in a week. That was a 14% move, which we called out, by the way. And we hit the top of the channel here, the uptrend channel. Now we've pulled back a bit, right? We're down towards 24.95, which is right by that 50 moving average on the 4-hour chart. I think it could go a bit lower. I really do. I think it could go 23, maybe 23.50 towards the bottom of this channel, maybe right by that 180 SMA. That is where I believe buyers will start stepping in. But now that it's, even though I'm not going all in quite yet, now that it's pulling back, I'm keeping a closer eye on it for potential dip buy entry. So I'm going to put an alert. Mark is at or below. Let's put this thing at 24, maybe 25. $24.25. We'll see if it starts going under there. That is where I'm going to start paying attention to it for an entry point. Planet 13 is another one that I'm looking at. PLNHF. This is one that is clearly, and it has been downtrending for the past couple of months, ever since the beginning towards the middle of February, when the stock was $9 a share. And the past couple of weeks, months, it's been holding the bottom of this channel, and it's been downtrending from 575, 5, 4, 450, and now it's making a move back up. Today it had a pretty good green day, up 8%, almost 9%, and it went up about 40 cents a share, and it closed above the 50 moving average on this 4-hour chart. So I think this could have some room to run, but the main thing I need to see happen here is Planet 13 maintaining that 50 moving average. It needs to stay above the 50 moving average, which, like I said, it closed above it, so it is above it right now. But the past couple of weeks, it was trading under it. You guys can clearly see. So now that we're above the 50 moving average, I'm watching it again, and I think it could see a bit of a leg up towards the 180 moving average, mid $5 per share on the stock. So watch out for that for PLNHF. Melly is another one, MercadoLibre. This one went up about 1% today, up about $16, and it's been pulling back with the overall markets. I mean, this was almost $2,000 a share back in the end of August, early September. Now it's under $1,700, so it is down about 15%. It's in correction territory, and the 4-hour chart doesn't look that great. I mean, We're under both moving averages. I'd like to see a recovery back over at least the 180 moving average in the mid 1700s on this time frame. But if you pull back a little bit, let's look at that 1-year chart. We can see Melly is actually holding the main 180 moving average on this 1-year chart, and we're still seeing a golden cross, 50 crossing above the 180 SMA. So by the looks of it, on this longer term year time frame, this could be a dip buy. It looks pretty solid. Volume's kicking up as well. RSI's pretty oversold. We've shaken out a lot of the weak hands. Let's see if we hold 1600, mid 1600. Let's get back above 17. That is where I believe we could be ending up seeing a decent move in MercadoLibre. So I should probably put an alert for this one. I'm going to put one at about, let's say 1700. Mark is at or above 1700 per share. And if I pop up the last one here, it's Splunk, ticker symbol SPLK. This one went up over 5% today. Pretty solid day in the sea of red that we saw. And it's battling with the moving averages, right? You can see here clearly on the 4-hour, we've been making lower lows, lower highs the past couple of weeks. And now with this pop today, we close right under the moving averages, and it can be potentially a bull trap. It could be. It really could be. So we got to set an alert right above this 180 moving average. If this starts peaking out of, let's say, 147, that is where I think we could throw out the bull trap theory, and maybe we start ripping back up towards the low mid 150s. So watch out for Splunk. It's running, but I don't fully trust it yet. So that's why we got to watch out for the high 140s as a bull trap spot. So keep your eyes on that. And that's pretty much it. I mean, we could talk about one more. I think we're short on time, or we're not short on time. So we could talk about one more here. The gold stocks, GDX crushed it today, had a pretty decent day, up about 2%. Gold itself is up 2%, up 35 an ounce. Silver's up about 70 an ounce, 70 cents an ounce, as it's up about 3%. So a lot of people are throwing out the gold stocks. They don't believe in the gold stocks. But if you're a bit more of a contrarian and you think, hey, gold's going to go up, silver's going to go up, dollar's going to go down, we're going to see more inflation, money printing, and so forth. Even though gold hasn't really moved up that much as we've been seeing inflation, which is a problem, I'll admit that. But I think these gold stocks still offer opportunities. I mean, right now on the 3-year chart, GDX is right above the 180 moving average. The stock is down about 35% from that $45 high that we hit about a year ago. So there's some value here. And full disclosure, I own GDX, so I'm not just saying random BS here. I own it, and my average cost is like 35. So I am down in the position. I'm not afraid to admit that. And I'm actually looking to average down more as we are towards the lows here. I mean, we just hit a low of $28. So this thing is out of favor. And when you make investment decisions, sometimes the best things to do, not always, but look where the crowd isn't. And at this point in time, the crowd is not near the gold stocks. They weren't near the oil stocks for the longest time. Now oil stocks have been ripping. You know, a lot of people are just mesmerized by the meme stocks, the FANG stocks, the tech stocks, and that ends up opening up opportunities in specific pockets of the market. And I believe gold stocks is one of these pockets. You know, gold stocks, silver stocks, a couple of oil stocks as well. I mean, I own XLE, which is now starting to rip again. It's an ETF. So that's a little bit of, what's the word here? That's a little bit of advice, to end off the video, even though this is not financial advice. So if you guys enjoyed it, make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon. If you want to know every single move move I make, when I make it, whether it's option moves, which I closed some covered calls today, whether it's trades, long-term buys, which I made 3 long-term buys today. If you guys want to see all that real time and you get a morning update video, more access to me throughout the day, plus more, that is all on Patreon, link down below, or you guys can go to StockSurfS.com/Patreon. Make sure to get your free money from M1 Finance and from Webull down below as well. And that's it. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out, guys.